All right, and Oracle, we're going to find out right now if they can deliver. We've got their earnings coming across the wire right now. For their third quarter here, they are looking at adjusted revenue of $17.19 billion. That is about about $500 million better than what was expected here. As we are looking at all their numbers coming across here, let's go through here. Software license revenue, $1.15 billion. That's better than the expectations here. Their all-important remaining performance obligations, that is coming in at $553 billion. That was at $130 billion in the year-ago period. The cloud revenue, that was a miss for the last quarter and a big part of the punishment that they saw. It's $8.9 billion right now. The estimates were looking for 8.84, so a small beat there. Cloud application revenue for the third quarter, $4.0 billion. That was the expectation there, so right in line. Software support revenue, $4.97. That's better than expected here. Operating margins coming in just barely above the expectation at 43%. 42.7 was what they were looking for here. So overall software revenue coming in at 6.12, also better than expected. That was $5.97 billion. Adjusted operating income at $7.38 billion. The street was looking for $7.21, and their full revenue again was $17.19. They've also raised their total revenue guidance up to $90 billion here. EPS also a beat here. They're at 179. Was looking for 170, or if you were looking at the not adjusted number, it was for 123. But regardless of which figure you were looking at, it is still a beat here. They're reporting their RPO is up 325% year over year. Alex, we are seeing Oracle move to the upside now, about 4% on these numbers. Knowing how volatile they are, obviously we're digesting them still. Are you surprised the move is not more significant at this point?
Well, I think there's still going to be a lot that's said on the conference call and a lot more of these details to be parsed through and sort of the framing. And so much of it's going to be, the CapEx and the build outs and the debt and the discussion around that. I'm not surprised that the initial reaction's higher. I'm not surprised that it's climbing. This is a strong report, but so much of it's going to come down to the confidence in the framing. That said, stock was down a little bit coming into today. It's obviously been down a lot if you go out over the last several months. Maybe I'm a little bit surprised that given the initial reaction was immediately higher and it's climbing, that it hasn't even gotten to the expected move yet. But a big part of the question is going to be the conference call, so perhaps waiting to hear what we hear.
Yeah, and Sam, I'd love to come over to you. I know you've spent a lot of the day talking about Oracle here and reading the notes that were coming out in advance of this highly anticipated report. What's sticking out to you on this report?
I think the numbers look good, and I think that's obviously why we've seen this reaction. But I would really echo what Alex just said. I think, obviously the proof is going to be in the pudding here. I think a lot of the nuance is going to be on that call, and that's what everyone's looking for, a little bit more color, particularly because they do want to get an update the market on the cloud business as well, particularly because of the market share. They want to just understand how much of that they're winning, particularly because CoreWeave, which just recently reported, did achieve that $5 billion in revenue. That was the fastest cloud provider to reach that milestone. So obviously there is momentum behind this sector. We are seeing it in the numbers right now. But obviously we just want to know, and this is what the folks over at Hyperframe were telling me a little bit earlier, if they can build into the demand rather than future demand. Now, obviously the RPO is looking encouraging with those triple digits. This is a bit of an alphabet soup type name because obviously you're looking at that cloud business and then the RPOs as well. Also just wanting to get a little bit more detail on the CapEx as well, particularly after Nebius and CoreWeave did announce their CapEx numbers. But this is obviously, as Alex sort of touched on there, the first AI infrastructure, I suppose, player, or at least big one, around the financing concerns that we've heard about. Obviously, since last quarter, they've got the OpenAI financing. We've got the debt to equity funding as well. So this company is borrowing money, and the market wants proof of where that is actually going and where that is paying off, and maybe just a little bit more information and update beyond the numbers that they're talking about here. But yeah, as I mentioned, Stephen Dickens was telling me that they're a very balanced company. Look, obviously with the database platform, the enterprise and the cloud, while all the focus very much is on the AI business though, he also implores the market to also just think about the fact that this has been around for a very long time, this company, and is deeply embedded in enterprise clients as well. So all in all, he does believe that this is fairly well positioned in AI infrastructure.
And Alex, Alex, I just want to get your thoughts too. Sam was mentioning that CapEx spend, it is coming across their fiscal year 26 CapEx expected to be about $50 billion. Also, they're putting out some of their guidance numbers that are better than expected as well. EPS higher than expected here. Revenue also expected to be up roughly 18 to 21% in terms of constant currency. This quarter, it was up about 22%. Full year fiscal revenue also expected to be up here. What do you think some of the questions are going to be, the most pressing questions are going to be on the call here? Because arguably putting up some good numbers.
Yeah, and this is where you have to separate Oracle a little bit from the rest of its software as a service peers, is the infrastructure as a service piece of the business is clicking on all cylinders, and it's going really well. The software as a service piece, if you're going to be nitpicky, it's in line to a slight miss. And so I don't know, the more I look at these numbers, that 11% growth, when you're expected to grow 11% for SaaS, is enough to quell those fears. I don't know that it means that Oracle needs to go lower, because the infrastructure as a service side is going so well. But I think some of those fears are probably circling something that is a real concern for investors going forward, particularly companies that are only invested in software as a service.
Yeah, certainly. And we talked about that coming in. How much does the SaaS sector need this? And you bring up a great point that those inline results, that's the one spot maybe we didn't want to see that number for the sector. Alex, we appreciate you being with us to break down those earnings as they came across the wire for us. That was Alex Coffey.